Last week's Budget 2018, tabled by the Prime Minister, announced a whole host of measures aimed at addressing various problems. Some announcements particularly caught attention, like the slashing of income tax for certain tax brackets, the threefold increase in the bonus of civil servants, and the increase in maternity leave for the private sector. This week on Esrawani, we kick off a week-long analysis of Budget 2018. We'll take a look at what the budget will do for different sectors: the cost of living, affordable housing, the digital economy, education, trade, the ringgit, the Bursa Malaysia, as well as the economy at large. You are watching The Marketplace with me, Luqman Haris. Yes, we continue our week-long analysis of Budget 2018. Today, we talk about how the budget affects one of the main, if not the main, sources of revenue for the country: taxes. And joining me to discuss it is Sim Kwang Gek, Deloitte Malaysia Business Tax Partner. Sim, welcome to the show.
Thank you.
One of the most talked about announcement in the budget is the reduction of the personal income tax. But that is made with the aim to, of course, increase people's disposable income and lighten their financial burden. But do you think this is actually enough for the lower income group?
Okay. Well, the budget announced a 2% cut, right, for those earning between 20,000 to 70,000 annual chargeable income. So this means that there is a disposable income of around 300 ringgit to 100 ringgit. Is this enough or not? To me, it may not be very significant, yeah, because the maximum is just $1,000 of disposable income. What can you do with this money? You can probably use to buy gadgets, or you use it to save, yeah, for your future savings. Yeah. What I was hoping is that I was hoping that the government will increase the reliefs, right? For example, personal reliefs that is currently 9,000 has been there since 2011, no change at all. In view of the rising cost of living, I feel that the personal relief should have been increased. Likewise for child relief, right, which is only 2,000 ringgit for children below 18 years and 8,000 ringgit for children above 18 years. These should have been increased in view of the rising cost of living.
We'll come back to that later. I still want to talk about the reduction in the personal income tax. On top of the deduction itself, this will also result in some 261,000 people not having to pay taxes. So in terms of government revenue, how big of a gap are we looking at for the government in the coming year?
Well, the budget speech did mention that with the reduction of 2%, you have about 1.5 billion disposable income for the ROC. Yeah, so I would think that's the gap we are talking about. But despite the cut being announced, the government is expecting an increase in personal income tax collection for 2018. They are expecting an increase of around 7%. So where does this come from? I think this could be due to the expectation that the economy may increase. The economy will grow by around 5 to 5.5% in 2018. This will, with a higher growth, then naturally income will increase. With increase in income, then tax collection should increase as well.
But will this be enough to cover the 1.5 billion something gap? And what are some of the ways that the government can actually find other sources of revenue to plug this gap?
All right. On top of the expectation that the economy will grow, right, I think there will be greater enforcement on the part of the tax authorities to ensure tax compliance. So perhaps you will see more tax audits coming in. There could be heftier penalties imposed for those who evade taxes. The government is also expecting an increase in GST revenue by around 5%, if I'm not mistaken, as well as corporate tax collection by about 6.9%. So these will help to fill up the gap. Yeah.
People are somewhat divided over this issue. Of course, a lot of people are supporting the reduction in personal income tax in the effort to increase people's disposable income. But on the other hand, there are also some who subscribe to the unpopular opinion that this is actually needed, and some of them are even calling for income tax brackets to be increased and to grow, meaning people should be charged more personal income tax to ensure a more solid source of revenue for the government for all the developments that it's embarking upon. So amongst these two schools of thoughts, as a tax expert, which one do you think is better?
Well, my view is, since we have the GST in place, my view is that individual tax rates has got to come down, because with GST, you find that most people will have to pay the tax. It's a consumption tax, right? When you consume, you pay the GST. So if we don't bring down the tax, I think it's going to cause a lot of hardship, especially for those in the B40 and M40 group. M40 will be the most affected, because B40 group I don't think they pay taxes, but the M40 group, yeah, these are the category of people that would suffer the most if you don't bring down the taxes. So if you look at countries like Singapore, for example, right, when they introduced the GST in 1994 of a 3% GST, they brought down the individual tax rate by 3% as well, from 33 to 30% at that time. And today, as of today, the GST rate for Singapore is 7%, right? So from 3 to 7%, they increased the GST rate, but with that, the individual tax rate actually came down. As of today, the top rate in Singapore is actually 20%.
Yeah. Right, we'll come back with Kwang Gek, Deloitte Malaysia business tax partner, with more on Budget 2018 and how it affects the taxation part of the country's economy, the marketplace. We'll be right back. Don't go anywhere. Welcome back to the Marketplace with me, Lukman Haris. We continue our week-long analysis of Budget 2018. Today we talk about taxation, and joining me to discuss that is Kwang Gek, Deloitte Malaysia business tax partner. For the break, you mentioned GST. It's a very contentious topic. There are also some quarters who are in favour of the SST to be restored to replace the GST. As a tax expert, do you think this is even feasible?
Well, my personal view is no, it's not feasible. Why I say so is that, well, if you compare GST with the SST, which is the sales and service tax, right? GST is a more effective tax system, more transparent in that sense, whereas SST, it can be subject to abuse, because it can be, there could be multiple taxation, tax cascading effect. And in terms of SST, whatever the tax cost that businesses incur, they are not able to claim it as an input tax, like in the GST tax regime. So number one, so that's the one reason. And secondly, GST is an established tax regime. It's not a new concept. More than 160 countries around the world has implemented GST. India announced that it will implement GST this year. Middle East, you look at Middle East, UAE has announced that it's going to be implementing GST next year. So even the Middle East countries are looking to implement GST because of the suppressed oil prices, right? So with so many countries around the world that has implemented GST, I don't think this is a bad tax, right? Instead of like doing a U-turn to SST, right? I think the government should look at how to fine-tune the GST tax regime, right? Look at what are the issues faced by businesses and how to resolve that. And I do see the custom authorities taking steps to do this, right? For example, in this year's budget, there was a proposal to give GST relief on big-ticket items. They call it big-ticket items imported by businesses in the aviation, shipping, and oil and gas sector. Why? Is because, you see, although GST, when they import, right, the GST will not be a cost to the business because you can claim input tax, but they are still giving the GST relief. Why? Because when you want to claim the input tax, you need to claim the refund, right? So the process may take a long time. And if the process takes a long time, it will create, unnecessary cash constraints to the company, and therefore the government announced this GST relief. And this is due to many discussions that company has with the custom authorities, and with that they introduced this GST relief. So it is it's an indication that the authorities are hearing out to the issues faced by the businesses, and if this continues, I think people will be more acceptable to the GST regime.
Moving forward, what more can the government do to improve and strengthen the GST regime?
One way is on, just now I've mentioned, right, by looking at what are the real concerns of the businesses, maybe also to expedite the refunds of GST, all right? And also looking at the GST revenue that the government has collected, right? We should be looking at how this money is going to be spent effectively in what projects. And if we have identified a certain project to be allocated, the funds from the GST, then there should be close monitoring on the projects to make sure that whatever money that we have put in, the benefits, we reap the maximum out of it.
We have about a minute left. I want to touch a bit about corporate tax. It was not increased. First, was this within your expectations? Number two, well, a lot of people are calling for the private sector to play a more proactive role in helping the government and complement the government's many initiatives. So the second part of my question would be, should it have been increased, the corporate tax?
Okay, so the first question was it within the expectation, right? It was expected that it will not be increased this year. Why I say so is because last year's budget, if you look at it, there was a cut in corporate tax rate, but that was dependent on the percentage of increase in your chargeable income, right? And that is available from year assessment 2017 and 18. And last year, there's also an announcement of a rate cut for the SME from 19 to 18% for your first 500,000 of chargeable income. So natural expectation this year, no cut announced, but
should it have been increased?
Huh?
Should it have been increased?
No, my answer is no. Currently, our tax rate is 24%, right? If you compare us with our neighbors, right? Thailand, Vietnam, Cambodia, their tax rate is 20%. Singapore is 17%. So if we want to be competitive with our neighboring countries, my view is that our rate should come down, perhaps maybe to 22 and 20% gradually. If we really want to attract foreign direct investments into Malaysia, tax cost is definitely one thing that investors look at before they decide to set up their operations in Malaysia. Right, so with that, with our GST, I think our corporate tax rate should come down gradually.
Thank you so much. Sim Kwang Gek, Deloitte Malaysia Business Tax Partner, talking to us about the effects of the budget 2018 on the taxation industry and what it means for the economy moving forward. That's it for this episode of The Marketplace. Send us all your feedback on all our social media platforms, Facebook, Twitter, Instagram at 501awani. Download our app, as you can see there, on Google Play and also the Apple App Store. You can also catch this interview on your podcast. Search for Astro Awani or The Marketplace, wherever you get your podcasts. Lukman Haris, thanks for watching. Have a nice day.